Hello traders, this is the first weekend video, the bigger picture one, in which I'm going to use 5 layouts of charts, and we'll go through daily charts of DAX index and futures, blank charts on US indices, US futures as well, then weekly charts for all of them, and at the end I will also show you the chart that I think that is the currently most important one, and that would be the chart of oil. So let's get into it. This is DAX index weekly chart. As we could see, the bounce on Monday was around the November low and also around 10% level from the all-time high. I will go now briefly to the daily charts. This would be it. DAX index daily to the left, DAX futures not back adjusted, this time on the right, and the thing here we had, this was Monday, a true gap down into large time frame support. Now this is very often that when market is making big true gap up or big true gap down, that price goes then into something important like large time frame support or a big retrace and then reverse. And we had that both on Monday and on Tuesday. So Monday was true gap down, but where? Right into the November low. And if we zoom out, we could see also that November low was just a spring below the June low, both of 2025. And that's the thing that market is doing. And you see that, for example, Monday RTH low, meaning the low made in the regular trading hours, was just 15 points below the November low, while minus 10% from the all-time high is this, 957, and this is 928. So within 30 points, we had the November low and this level, and market just went just a bit below that. On Tuesday, we had true gap up, and on this move, but on futures, market hit the halfback of this entire down move from the February high. Now, why we made here two crossing fibs on a down and on the up? Because on the up move, because when the market is making a lasting swing low, so swing down on the entire down move, then swing up on just 2-day move, Monday and Tuesday, then pullbacks of that move are going to be bought, and usually go on any chart, observe big swing lows, zoom in a bit, go on a daily chart, and you will see that if market is able to make a lasting then higher low, so for example this is a lasting swing low, then this is a higher low, that higher low likely is going to be halfback or 61.8 fib retrace of that first bounce. So all of that we had previous week. Again, gap down into large time frame support, then gap up but into halfback of this down move, and then on the way down, market found support at the so-called kill zone, which is the space between halfback and 61.8. However, what we can see here on a daily chart is on index, market closed below important level, March 2025 double top, and made an outside day with big rejection tail. So this is giving a slight bearish tone for the next session, because you see what scenarios we do have here on futures. The one would be bounce from this zone, which was active on Thursday, while on Friday we had basically an inside day on futures, although the high was just false break above the Thursday high, versus this scenario, which would actually be retest of the Monday low, and then we take it from here. Now let's go back to that weekly chart and observe other indices on weekly, but before that let's see how US indices are standing regarding to daily 200. And daily 200 is this moving average on futures. So here is the S&P, and S&P index didn't reach daily 200. Nasdaq also didn't reach, but it's very, very close. So I think it's just a matter of time when they are going to finally touch it. Well, this is Dow Jones, and as you can see, Friday low was basically a test of daily 200. This is Russell way above. Now, futures are a bit different. So these are the futures, back-adjusted futures of S&P, Nasdaq, and Dow Jones, respectively. And you can see how Monday low was just a pierce below daily 200 on all of them, while on Friday, they basically all of them closed right at daily 200. So daily 200 already tested, now they closed right there. And when we go higher on a weekly chart, again here on this chart, observe two things. Observe this pattern here. It is a range, but also it's like a broadening pattern. You here have marginal higher highs, while here the bottom is flat. It's horizontal line. And the same was here. This area here, this would be from April 2021 all the way to February 2022. 11 months here, and then a breakdown. So that would be, let's observe, let's stick with the DAX. Here this is also weekly chart, but logarithmic chart. So that would be here this. This was around 14,800 and the marginal higher highs. Now observe this, which is now. It is the same pattern. And this pattern is usually a bearish pattern. So now it is a question, can we get some similar move like this? Also given the fact that here is still unfilled gap between April and May 2025. And this is the only gap that you can see even on the monthly charts, which is highly unusual to see a gap on a monthly chart. And you see where the low of this week was regarding to this channel, which on, again, logarithmic chart is holding the price for the last few years. Now, if we observe other markets also on the weekly chart, you can see that the DAX found support around November low. You can see where the June low was, the November low was a spring below that, then this one was a spring below the November low, while this is S&P weekly, which last week broke the 7-week range. And it is still above the November low. This is Nasdaq, also still above November low, also still inside this big channel, while other markets like Dow and Russell are weaker. And as said in the previous weekly video, I wouldn't be surprised if we go down and tag this area here, which is completely in line with 38.2 Fib retrace from the April 2025 low. I think this could be done, and down to this area here, that would be like a minus 10% down move, which is something that German DAX already did. This is a Russell weekly, and you can see that the price tagged November 2024 high, which was what? Just a uptrust above the November 2021. So here, that's why here is the breakdown point. Then if they go down, you could observe these previous levels together with Fib retraces. So that would be here in the bigger picture of all of these indices, and behind everything, I think this is the oil futures, and I think this is the most important chart because in the previous down moves we didn't had this, and this is something that is inflationary. Also for all of the markets, this is a weekly chart, and when we go down to daily chart like this, then you can observe how these previous highs here are now being used as support. So here and in this part, oil was between 80 and 100, and I'm not economist, but I think oil above 100 and around 100 is pressuring all the economies, and thus the markets tend to lag to accept what's going on. So if this persists, meaning high oil prices, if they persist, they are going to pressure the markets. And once again, all of these markets do have more room to the downside. Russell, if it breaks down, to go inside this huge range. Then back to Dow Jones, I think this can be done. And on Nasdaq and S&P, to observe the situation around November low, and on daily charts to observe situation around daily 200, because as shown, indices still didn't test daily 200 while futures did. On the other hand, DAX is way below daily 200 and could revisit Monday lows, and then we are going to take it from there. If that happens, so now let's go back to that daily chart of DAX, and let's zoom out a bit here. So if that happens, this is the one with the less references. If that happens, we are aiming down toward this gap from between April and May, and then we have more on a downside like this here. And for example, filling this would take a minus 15% of a move. This is from January high measuring down. You see, it would be like minus 15, minus 16%, while down to here would be 11.5, let's say, and this, what they did so far, was a 10% down move. So that would be it about the charts. Next week also is full of potential catalysts. There is pretty much nothing Monday, Tuesday, or Friday. There is German economic sentiment on Tuesday, but it's not the data that can do anything. But on Wednesday, we do have US PPI first, and then FOMC day, which is very important for all markets. No rate change is expected there, so there could be a big surprise if there's going to be a rate change, which is very low odds. But FOMC press conference can be important, and as we know, Powell is going to be head of Fed for only 2 more FOMC days. One of them is Wednesday. Then on Thursday there is a bunch of central banking events: Bank of Japan, Swiss National Bank, Bank of England, and important for us, ECB as well, where again no rate change is expected. So maybe there's going to be something in the on the press conference later, but in any case, the data of the week is certainly FOMC day, and I think eyes are going to be on Powell and on that oil chart. So that would be it. Prepare yourself for another potentially volatile week, another week in which market could make sharp throws up and down like this week, and another week in which we can and should expect news-driven moves out of the blue, and especially in the afternoon. I mean afternoon for European traders. So that would be it. I hope you enjoyed this video, and as always, I wish you a pleasant weekend and good trading.